Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. For today's video, I figured it would be the best value to dive back into the shorter time frames, analyzing Bitcoin over the last 6 months, and sharing with you guys where I believe the low is going to be put in for Bitcoin to ultimately start breaking new all-time highs. As you guys already know, the next move that's coming for Bitcoin is going to be one of the most parabolic market cycles we've ever seen in crypto. One where we've been accustomed to seeing many parabolic cycles, but this one, in my opinion, is going to be taking the cake. We are going to see so much profit flooding into the market with a lot of new retail investors FOMO buying because they feel like they're missing out. And today I figured now we could jump in, look exactly where I think the prices are going to be headed, and targeting how we can go about selling at the end of the year to maximize our fullest profit potential. If you're new and just finding this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure you guys sign up and join the Discord server of over 21,000 members and growing. Links are provided for you in the description for the people that want to join my community. On top of that, if you're new and you want extra educational content on how to be more profitable inside of these markets, you guys can also download my free ebook and Beginner's Guide to Crypto that I know is going to help you guys out tremendously. So check it out. Links are provided for you in the description. And with all that being said, guys, let's jump right into this amazing video today. Alrighty guys, so here we are taking a look at Bitcoin. This is actually the Bitcoin market cap chart, and I wanted to share this one with you guys because in my opinion, the market cap charts are actually the easier to follow charts in crypto. You know, you can look at the dollar and that's going to give you roughly the same exact analysis, but the market cap, they follow a lot cleaner PA levels. And so I wanted to share this one with you before we jump into the next chart. We're going to be analyzing for today's video blow off tops in Bitcoin's market cycles, analyzing what they look like, and then comparing it to what we're seeing today after I get through with this short-term price action. So first things first, guys, I wanted to share with you guys what I was looking at when it comes to Bitcoin on the shorter time frames. Now, in my opinion, we're going to be taking a look at the market cap chart because this just shows a lot cleaner PA than any of the other charts out there. So first things first, we're going to draw this red line here because this is pretty much a very strong level of demand both for the buyers and the sellers inside of this recent Bitcoin correction. You guys can see that we've acted on this level a number of different times. It's acted as both support and resistance. And most recently, with this drop from just under $1 trillion in market cap all the way down here to the most recent drop we saw in the price, which price-wise, that brought us back down to about 39,000. We saw an immediate bounce back up, but we weren't able to actually flip this level. And so this was a rejection, right? This is what's known as a support and resistance flip. Anytime you have prices riding on a given support or resistance level, and it actually breaks below that level and then retests it, as support or resistance, in this case resistance, that's a support and resistance flip. And we're actually seeing support becoming resistance right here. Now, ultimately, this is going to be taking us into one more low before we ultimately finish this correction. And so this is going to freak a lot of people out. A lot of people are going to be worried. We're going to have another massive dip day where most people are going to be looking at this as, you know, cause for concern, claiming that the bull market's over, and I'm going to be using this as an opportunity to get into other positions that I've been watching, add to some of the positions I already have, and just continue to dollar cost average like I have this entire dip. You guys know, if you've been watching this channel, we were watching for a major sell-off to take place at some point inside of this dead cat bounce. And, you know, technically I don't think this is a confirmed dead cat because I believe that this is a higher high before we go to new all-time highs, but nonetheless, in the short term, that's kind of what it looks like. I've been telling you guys that from the low here, I knew that we were going to bounce up at some point, and after we tagged resistance, my thought was it was going to be at about 48,000. We ended up coming all the way up to 53,000 before the correction actually started, but I knew that there was going to be an opportunity for us to get back into positions, and so I said to wait, I said to be patient, and that's exactly what we're being tested as right now. For the people that bought late, the people that FOMO bought throughout this rally, they're now really starting to question themselves. They're starting to get really anxious because the market keeps dipping lower. They don't have any new cash on the sidelines waiting to buy more. And so they're actually in the thought process of, man, you know, I'm wasting all my money. I need to sell now so I can just realize some gain, right? And so that's what a lot of the people that, you know, bought late inside of this, or even the people that bought the top here that weren't willing to sell right here, now everybody's getting very anxious. And so this is where we're going to see a lot of people make irrational decisions. This is a moment where most people are going to be looking to sell. Most people are very anxious right now, but you got to flip that frame of mind and remember that this is a good buying opportunity before we go into new all-time highs. And I'll share with you guys kind of why I actually think that's so. So let's come in here and let's actually draw a support box, because in my opinion, really where we're at right now is an amazing opportunity to buy this dip. And really I'd drop this down a little bit lower, about to like here approximately. This is going to be a really great opportunity for people to actually jump into this dip, because even though I've been buying this entire way down here, I bought positions over here, I bought positions over here, and I'm going to continue to buy more because I've just kind of averaged out my cash. I still have a decent amount that I've been looking into other altcoins that kind of took off a little bit early. A lot of them pumped really hard inside of this move here, and so I've been waiting to see if we would get a correction for me to jump back in. And in my opinion, this next drop is going to be a big one that is going to shake out a lot of people, and this should lead us to capitulation, right? Now, when I take a time to just look at this chart, what it shows to me is we've had a very important level reacting at this specific level for a long period of time. We've seen that this has acted as support, it's acted as resistance. We've seen a number of different retests inside of this level. You can see it right here. We've even had short-term deviations both here, here, and here inside of this level. And we've seen retests as support. And so this is a really, really important level, guys. We've reacted to this exact zone, I should say. It's not one specific line that I can draw, but we can see that this is a massive zone of high demand, both resistance and support. Every time prices react to this, we're either going to get rejected or we're going to flip it and it acts as support for us to push higher. And we saw that over here in this 2021 consolidation around the beginning of the year. We saw it all throughout this final sell-off. We first sold off from up here at about, you know, price-wise, I think that this was closer to about $60,000. We sold off, and then we pretty much just found support right here at about, you know, $40,000, a little under $40,000. And we pretty much chopped around in this exact range for a long time until this range became resistance, and then we sold off back down to 29,000, right? And so then in this most recent move that we had on the upside, we rallied straight up, flipped this resistance, it became support, and then we rallied up to 53,000. So in my opinion, the same thing that happened right here, where the market rallied from 29,000 up to here, flipped this $37,000, $34,000 level, whatever it is. Once we flipped that, and then went higher, I believe that that's what this entire move is. It's just happening on a much bigger time scale, right? This entire move is us breaking this level, selling back down to reclaim this level as support, and then when we do actually hit this level once more, that's when capitulation is going to set in, and then we're going to be going up into the next move, which is going to be taking us past the all-time highs. This is what I'm personally watching out for with Bitcoin. You know, all of the price action levels, it looks very spot on. I'm not worried about this correction in the slightest, and the fact that it's dipping as much as it is should just be a great opportunity in your guys' eyes to buy more, or, you know, if you don't have cash to buy more, simply wait. Don't overtrade. Quit staring at the charts every single day. The biggest mistake that most people are going to cost themselves, the people that have held all throughout this period and don't actually have more to buy, is simply just overtrading by overanalyzing. If you're overanalyzing the charts, it's going to just cause more emotional tension and strain inside of your well-being. And it's that emotion that ultimately causes you to make irrational decisions like panic sell bottoms. And so from the high, you know, we're going to be looking at near a 30% correction from the high we made at 53%, which historically, if we look at corrections of that magnitude, it's been an opportunity to get back into the market. And we've seen this over and over and over again. This one was pretty close to that, about 30% exactly. This one over here was pretty close to that, about 26%. And we've seen this happen a number of different times, even though all of these came towards the top, and then this sell-off was more of like 60%. There are bigger shakeouts that happen, but the fact is we've only had a small rally, right? From 29,000 to 53 back down. For us to be having a 30% pullback inside of that move, you know, it's going to be shaking a lot of people out because it's erasing, you know, the majority of this impulse. So if we pull up our Fibonacci extension, we can see where we're at right now, that's going to be taking us perfectly in line with the 618. And so the thing is, guys, if you're watching this channel, and chances are, I think, what's his name? Blockchain Backer, he does the same thing. He's really into Fibonacci targets, and of course he uses a lot of extension targets into price discovery to know when to take profits. But Fibonacci tools are going to be some of the greatest opportunities for you guys to use a technical indicator that is really basic and easy to use. And the 618 inside of a bull market is literally the prime time to be getting back into new positions. Generally speaking, in a bull run, the market will retrace all the way back to the 618. And if we actually draw our Fibonacci from the beginning of the range all the way back down here up to the top at 65,000, you can see that Bitcoin perfectly wicked off of that same 618 level. So you measure from the beginning of the run all the way up to the top, and then that's going to give you your extension targets. And the 618 was the exact bottom that we saw here at 29K. Technically, we pierced slightly below it, but there was wicks below it this entire time, right? But it shows you that the 618 is going to be the prime time to be getting back in when the market is bullish, when the market's taking off. That's really what you want to look for. Inside of a bull run, you're going to see markets rally really hard and then pull back to the 618 before continuing on in their trend. And so it's not coincidence that Bitcoin, from all the way back down here around 10K, rallied up to 65,000 and then pulled back and bottomed perfectly at that 618. It's not coincidence. It's not coincidence that Bitcoin rallied from 29,000 up to 53, and it's looking like we're going to get one more low. And where is that one more low going to take us? Well, right smack dab on the 618 on the shorter time frames. So that's really what I'm watching for. I do believe that we're going to tag this 618 level once again. We could technically pierce slightly below it. There might be a wick formation that takes place, but it should not worry you in the slightest, because inside of a bull market, you're going to see this happen over and over and over again. You're going to see markets move up. When they make their short-term corrections, they're going to hit that 618, and then they're going to keep going up. Because if you're not familiar with Fibonacci, the 1.618 is actually the golden ratio, right? It's phi. And so all of these Fibonacci extensions and all numbers of the Fibonacci equation are divisible by the 1.618, right? It's basically the average of all of those. And so the 0.618 is kind of saying the same thing, except I always use the 1.618 when it comes to fractaling out extension targets for when to sell, but the 618 is going to be the golden ratio of the Fibonacci extension. Notice how it's slightly in the middle between all of these, and it's really the average price that Bitcoin and the rest of the markets are going to rally up to and then correct down to right on that 618, because it's pretty much just the golden ratio of the Fibonacci extension tool. And so that's a little bit of advice I can give you guys if you're actually watching this, wondering how Fibonacci works, what I look for specifically. And what I can say is the market is looking primed for a great opportunity to jump back in. I'm going to be leveraging the rest of my cash that I have in this next dip. I don't really care if it goes slightly lower, because it doesn't necessarily matter, right? All I care about is averaging down in this entire dip. I had a cash pile waiting on the sidelines ready to get into that opportunity, and the opportunity just keeps getting sweeter for me. And so do I have any insecurity? Do I have any doubts? Do I have any anxiety about this? Not in the slightest. Until this 618 becomes resistance and then we start really dropping, I'm not going to be stressing about it. I'm going to be buying more. And I think that everybody else should be looking to do similar in their own trading plans. Now, let's actually dive over here and let's analyze the actual Bitcoin price chart. And I wanted to share with you guys a cool little update with the quarterly time frames, right? So the quarterly time frames, April 1st, July 1st, and October 1st. And then once again, we're going to have January 1st be the end of that quarter, right? Or December 31st, technically. And so these are going to be the 4 quarters of this year, right? And so where we're sitting at, and really comparing it to what we've seen up to this point, notice how these quarterly time frames are a major pivot point inside of the market. And if we pay attention to this, the first quarter of this year was the cycle top at 65K. We corrected. The second quarter was pretty much the low here before this most recent move. And now we're correcting and we're approaching this beginning of the fourth quarter, right? The end of the third quarter, beginning of the fourth quarter, which we all know fourth quarters inside of crypto are oftentimes the most explosive. And so it looks like Bitcoin's going to get one more low. We're going to retest the 618, take us back down to about 37,000. And then we should see the bottom of that move before we start going back up into this new trend and make new all-time highs from here. I believe that this quarter is going to be massively explosive. We're going to make a ton of money inside of the process, and people that are willing to hold throughout this period are going to see that exactly play out like I have shown. Remember, pivot points here. The quarters of the year are major pivot points. We saw the beginning of quarter one as the cycle top. We saw the beginning of quarter two, the short-term cycle low. We're seeing the end of quarter two and the beginning of quarter three as the major bottom for this first higher high. And I believe that the next moves are going to be the ones that see us go into new price discovery and take us to $200,000 plus per Bitcoin. We're going to see massive rallies inside of the market, which is why I wanted to go back and share with you guys the blow off tops inside of the Bitcoin cycles, and really just sharing with you guys what the prior ones have looked like, because a lot of people are still really doubtful that we're going to see the markets go up that fast. A lot of people are saying that we're going to go, multi-months into 2022. And although it's possible, and of course, I'm never going to write off that scenario by any means, I'm going to be helping analyze, when to exit the market, not only by the time frames, but also by price action too. And so if the market just doesn't look parabolic by the end of the year, I will look to revert my trading plan slightly and begin to slightly deviate that just a little bit. And when I do that, if I do that, I will make sure to update you guys. I don't want you guys to be left in the dark, but regardless, I will take a big chunk of my profits at the end of the year based off the time frames. If the market just doesn't look parabolic at all, I will think that, maybe we could go a little bit further past the end of the year, and I will help with price action to help me dictate exactly when to take profits. If we come over here to 2017, we saw this type of a move that took place where it was pretty much just straight vertical, right? Now, of course, this cycle looks different from the last cycle. In the last cycle, we saw a lot of just solid uptrending, right? Higher highs, higher lows, accumulating on a parabolic trend, and it was just a giant rounded formation, right? The market just kept getting more and more parabolic here. Just this, you can see the parabolic trend increasing. And so this cycle does look slightly different from that. It's not 100% the same, but in the final 3 months of that cycle, remember we bottomed here at the end of September, and then from the end of September, we went straight up to 20K, right? It was a massive blow off top that ended up taking place. And so the time frames are almost exactly the same as that 2017 cycle. The price action looks different, but nonetheless, the time frames are still the same, right? And so if we come back and even look at 2013, we can see that it was very much similar. The beginning of the cycle looked similar to what we saw in 2017. Higher highs, just slowly building on this trend line. We can see it getting more and more parabolic, and then we see us break into new all-time highs, right? And so the time frames over here, we bottomed at pretty much July, right at the 1st of July, and then right when we started to actually leave these previous highs, it was the first higher high that set in. We bottomed July, we made our first higher high, we sold off to retest the lows here. And where was the bottom of those lows? Well, at the very end of September, the beginning of October. And so guys, if we're comparing the last two cycles that we've seen here, this is nothing unheard of. This is nothing new. This is almost the exact same thing being reciprocated in each cycle. When we take the time to just analyze what happened in 2017, well, mid-September to the end and beginning of October, we saw our first higher high pullback, and then we went into price discovery for that blow-off top. And this is what the blow-off top looked like back in 2013, guys. And this is why I actually believe we're going to be following 2013 cycle a lot more closely. Notice how 2017 was very parabolic, but in 2013, it was arguably more parabolic. This is even more vertical than what we saw in 2017. Even though it's very similar based off of just how parabolic it went, 2013 was still more parabolic. And when we just analyze these two specifically, in my opinion, 2013 looks the most like what we're seeing today. Something along the lines of this. When we just overlay it and we kind of compare the two, you guys can see, a lot of the similarities that we see between these two cycles. After the top was different from what we compare it back there to 2013, we get a rounded top. The other one was pretty much just a vertical blow-off top. But nonetheless, we get the correction, we get our first higher high, and then we get this quick sell-off that takes place to retest those previous highs, the previous resistance levels as support. And that's what took us into that blow-off top. And so, do I think it's going to go quite as parabolic as 2013? I really have no idea. Most likely not, but I still think it's going to get very parabolic because the time frames, nonetheless, are the same exact across every cycle. Even when we compare it to 2013 Even when we compare it to 2017, you know, we bottomed here at the end of September, and then from the end of September, beginning of October, we ended up rallying all the way up to the blow-off top that closed out the end of the year. The same thing ended up taking place back in 2013. There's almost no difference here. The price structure will vary, but nonetheless, it's all the same. Where did we end up bottoming here after the first higher high? The end of October, the beginning of October, and then from the beginning of October, we rally all the way up to close out the bull run. This one ended up topping about the 1st of December. 2017 ended up topping about the mid-December point. Time frame specifically was about 15th of December. So mid-December, I think that this cycle is going to be about the same. Lengthwise, I think that we could overextend to the end of December. It's very much possible. I'm simply just going to be scaling out. Whatever I get, and I'm going to be thankful for. If the market doesn't look anything like this, let's say the market does something along the lines of this, where we correct back down, and then we're kind of sitting here, and we're just barely going up, and we're like right here at the beginning of December, and we still haven't even reclaimed these previous highs, or maybe we're sitting at the beginning of December, and we're just barely past those all-time highs. I'm going to be looking to hold, right? I'm not going to be selling all of my portfolio right there because once again, guys, we are looking for a blow-off top formation. That's what we need to see. We need to see a massive parabolic blow-off top. If the market isn't parabolic, I'm not going to sell all of my portfolio. I'll still definitely sell a lot, even if we're at this point, you know, breaking the all-time highs, right at the all-time highs by December. I'm definitely going to sell some just because I need to realize some gain. I've already met my tax threshold of being holding at least a year and a day. And so I will take some profits. But once again, guys, we're basically combining PA, price action analysis, with the time frames. There's not going to be one specific thing that is the end-all, do-all of market cycles, even though I believe that we're going to follow the time frames. And I'm going to be looking to sell out of my portfolio, you know, at the beginning of December, mid-December to the end of December. I'm mainly going to be looking to analyze what the price action looks along with the time frames so that we fully know, right? Because at the end of the day, if the market doesn't just look parabolic at the same time we're seeing at the end of the time frames, there's definitely going to be somewhat of a deviation, right? And so that's really what I'm going to be watching out for. I'm going to be looking for the time frames, looking at December, mid-December, end of December, and then how the price action looks around that time. If we're not parabolic, I'll look to hold some of my portfolio a little longer. I'm gonna be willing to do that. But if the market is already looking parabolic, we're already seeing moves like this, I'm definitely gonna be selling out. You know, whatever the prices are, it could extend. I might miss out on some of the profit coming into that blow off top, but it doesn't necessarily matter. This has been the plan. This is what I'm gonna stick to. We've seen both cycles play out exactly to the same time frames. Price action varies, but nonetheless, I think that this cycle is going to be very much the same. So anyways, guys, this is the video I had for you. Wanted to share with you guys some short-term price analysis. Wanted to share with you guys why I believe the 618 is going to be the low for this cycle, taking us to 37 to 38K. Wanted to share with you guys how it's actually compared to what we've seen in the last two cycles, analyzing the time frames, noticing that the time frames and the price action have varied, but the time frames have always stayed the same, right? That's what I'm watching for once again this cycle. The time frames are still very much the same thing, looking for that fourth quarter blow off top, end of the year rally, highest amount of profit potential to be made in the next 3 months, and I look forward to seeing you guys do that. So if you guys found value in this, leave a like, comment, and subscribe to this channel. Hit that notification bell so you don't miss out on any of these amazing videos. If you guys would like to join the Discord server, links are provided for you in the description, as well as downloading my free ebook and beginner's guide. Once again, guys, get in there at my discounted rate for my video course and signals and the beginner course. If you guys want to get into all of my products, follow my courses, and mainly follow the signals, how I'm taking profits at the end of the year, and where I'm diversifying those, I will be closing off that ability soon. The discount's going to be over, and so if you guys have been waiting to get in my group, now is the opportunity. It's a lifetime membership. Buy it once and you're going to be good forever. As long as I'm doing this channel, as long as I'm investing in markets, which obviously is going to be a long time, you guys are going to know exactly what I'm doing with that. So thank you guys so much for watching. Check it out. Links are in the description. And with that being said, I'll catch you in the next one. As always, peace out.